Thanks for staying with us on SABC News. Now, Hong Kong stocks finished higher on Friday after data showed that China's services activity grew for a fourth consecutive month in April as businesses continued to benefit from a return to pre-pandemic levels of demand and output, although expansion is slowing slightly. Mainland China shares declined, dragged down by artificial intelligence-related company. Tech giants listed in Hong Kong advanced 1%, with the Alibaba Group holding up 1.2% after Bloomberg reported that e-commerce international shopping unit is exploring a United States listing. In the currency market, the Japanese yen strengthened 0.20% on course for its first weekly gain in nearly a month. The Nikkei is closed today, but the Shanghai Composite Index dropped 0.5%. Hong Kong's benchmark Hang Seng Index added 0.5%. Let's go to the United States now. Wall Street ended lower on Thursday after PacWest Bancorp confirmed that it was exploring strategic options, including a sale. The move deepened fears about the health of United States lenders. PacWest shares tumbled and other banks got hammered as well. The S&P 500 was down 0.72%. The Nasdaq Composite lost 0.49% and the Dow Jones Industrial Average fell 0.86%. Coming closer to home now. The JSE is trading higher today. The All-Share Index has gained 0.9% to 77,955. The Industrial 25 Index is 0.8% up. Financials have added 0.7%. Markets in Europe are also higher this hour. Britain's FTSE 100 as well as the CAC 40 in France have added 0.5%, and Germany's DAX is 0.9% higher. The rand is trading at 18 rand 36 to the dollar, 23 rand 15 to the pound sterling, and 20 rand 24 to the euro. When we look at commodities, gold trading at $2,037 an ounce, platinum at $1,037 an ounce, and a barrel of Brent crude oil at $74.33. Let's take a look at what's moving the markets and why. Warwick Lucas, the head of Galileo Securities, joins me now. Warwick, thanks so much for your time on SABC News this evening. Let's start with the US. We saw the Federal Reserve raising interest rates this week and so much more turbulence when it comes to the banking sector in America. What else is moving the markets there?
Okay, so as far as future interest rates are concerned, the Fed took out any sentences pointing towards the need for additional policy firming. So that is suggestive of a topping out. Now, in the meantime, we know that those markets have been expressing lots of concerns about growth, and yet the current GDP outlook looks to be stable to moderately positive. But otherwise, the bizarre thing about banks and growth, for that matter, appears to be some kind of disconnect between perceptions and reality. We had a recent Gallup survey asking members of the US public about their perceptions of the safety of their bank deposits, and it showed that 19% were very worried and another 29%, I should say, moderately worried, which actually is about half. Now, this is quite silly because the US has excellent depository insurance and a well-established history of safe landing problematic banks and looking after depositors. I think one thing that is an issue there, the shape of the yield curve is potentially problematic for banks. What I mean by shape of the yield curve, that is what are short-term interest rates doing, what are 5-year bonds, 10-year bonds, long bonds, and so on. But it shouldn't be a problem for as long as the property market is at least staying half alive. However, we're going to find that embattled banks might be secretive right up until things look like they're a total disaster. And I think that's what's keeping individuals awake at night. So maybe what we need to see is a stress test program by the Fed to shore up public confidence. Certainly, though, very short-term interest rate are high. We're looking at 5.5% on 1 month. So, maybe there's some interbank payment worries there as well. So the Fed is going to have to be quite active in the next couple of months, making sure that confidence is kept going on in that banking system.
Warwick, we know that what happens in the United States affects almost all of us, but more so Asia. Japanese markets closed today. Is that negative sentiment bleeding into the rest of the Asian markets?
So perhaps a little bit last night, but I suppose one would actually hope that there'd be at least some kind of benefit from deglobalization. Certainly on zigs and zags, I think not a lot coming through, but I think they are going to watch quite closely for sure. Okay.
And then when we go to Europe, we saw their central bank, the ECB, raising interest rates by 25 basis points as well. Why and what are markets in that region doing?
Okay, so in Europe, inflation is running at a fairly hot 7%, and core inflation is at 5.6. So that's quite high. In fact, it's very high in the European context. But markets don't seem to have been upset at all by the rate hike. I think, firstly, because it's well discounted and well communicated, and it also signals that the ECB will deal with inflation via a kind of steady constriction rather than some kind of hysterical interest rate assault or knee-jerk reaction. It's going to just be a steady process of crushing, of squeezing inflation out there. So I think the market looks comfortable, and it probably should be.
And then, Warwick, when we come closer to home, it's quite a quiet day on the JSE. When I was checking the SENS announcement a little bit early on, didn't see much movement. Is that what you're seeing as well?
In terms of activity, yeah, absolutely. Look, I mean, we saw some fairly big moves amongst both ways amongst commodity and gold shares. I guess that's probably a currency effect. I think, to me, Pick and Pay, the interesting one, obviously, because that's so in touch with what's happening with load shedding, what's happening with consumers, and so on. I think I'm still going to continue to be watching closely what's happening with banks and residential property locally. I think our residential property market obviously has been under quite a lot of pressure, and I think that's important to the health of our financial system as a whole.
And tell me, what are you watching in the week ahead, both locally and internationally?
Okay, so locally, we're going to be looking for mining and manufacturing data next week. That's going to be quite important to keep an eye on things. As far as the US goes, I mean, we've got to look out for non-farm payrolls later today. The US is expected to have added about 180,000 jobs in April, which would be the smallest gain since December 2020. And particularly the services sector should have created jobs, and a bit of a decline in manufacturing. Now, I think the most important thing there is we're actually looking to see a little bit of an uptick in unemployment in the States, and I think when that happens, that's something that will further indicate whether or not the Fed is going to keep hiking or just take its foot off the pedal just a little bit.
Warwick Lucas, the head of Galileo Securities, really appreciate your time on SABC News this afternoon, taking a look at what's moving the markets. So we're speaking about rates there of the US Central Bank and the European Central Bank. It's expected that we may also get another interest rate hike. When we come back, we'll bring you more news about that and take a look at what else is moving the markets and the big business stories of the week.